With AI, I'm seeing crazy lean businesses ran by one or two people. They're doing hundreds of thousands or millions in revenue. 2 years ago, you used to be able to sell a pre-revenue software project that's ready to launch. Maybe the person developed it, moved on to something else, or just couldn't find any customers. Those would sell for $20, $30, $50,000, and those are a challenge to meet buyers now. We've helped over $500 million in total closed transactions. Creating competition in the process is the number one thing you want to do to increase and maximize your final sale price. It's usually the biggest liquidity event in a founder's life. So making sure that you do it correctly, you're following all the steps, I think is extremely important. We had an acquisition close this month. The founder was 84. I sold for like $2 million cash.
What are some interesting startup trends that you're seeing or internet business trends that you're seeing in the acquisition space? And then we can dig into what acquire.com is.
Yeah, I think what's super interesting to me is always just really lean, profitable businesses. And with AI, I'm seeing crazy lean businesses ran by, one or two people. They're doing hundreds of thousands or millions in revenue. Marketing's automated, support's automated, lots of product-led growth. I think those are really interesting businesses where, we call them like the vending machine, where they're just these awesome products that are online all the time. They don't require a lot of support or handholding or sales. Been seeing a lot of those, and I think they're great acquisitions and love seeing them.
Any in particular niche? Like, is it more of just like SaaS products within content, or SaaS products that are aimed at healthcare, or any niche that you're seeing just like trend going up?
We see kind of a little bit of everything. Every month we take around 250 startups live on Acquire, and out of that
Nice.
we see over 1,000 submitted. So we only approve about 20%. So we
I
see
didn't know you guys had like a filtering process.
yeah. So we filter every single business that comes through, but we see, again, healthcare startups, we see MarTech startups, we see very, very simple businesses. There was a startup that connected with your Stripe account recently and would sync all of the users' contact information over to ActiveCampaign or MailChimp or Beehive or whatever you're using to email your subscribers. It was making like a few $100,000 a year. I thought that was pretty cool. Literally did one simple thing really, really well. It was super profitable. So lots of businesses like that.
And I like how you touched on the point of like AI is now making it possible for people to run super lean and be highly profitable. It's just like kind of an assumption that I had was like, because anybody can now build an AI, like, empowered startup, does that mean like the market is, more competition and making it more difficult to sell? Or are you guys just seeing the number of AI startups that are trying to be sold, going up?
Yeah, a little bit of both. I mean, anytime there's more supply in any sort of market, it's just going to be harder for that supply to find buyers. I think the biggest
Yeah.
impact that we're seeing with AI so far is, let's say 2 years ago, you used to be able to sell a pre-revenue software project that's ready to launch. Maybe the person developed it, moved on to something else, or just couldn't find any customers. Those would sell for $20, $30, $50,000, and those are finding a challenge to meet buyers now. And then the businesses that have product market fit, they have customers, they have product profitability. We're seeing the acquisition interest for those actually increase. So I guess what I'm trying to say is the market feels like it's almost being flooded with these low quality products that don't have any traction. And the barrier is execution by finding customers, paying ones, having actual usage of the product. I'm sure that'll change at some point, but with tools like Replit and Lovable, it's been, the game has completely changed on how to build an MVP. And I think a lot of people are quickly building those MVPs, but the challenge in starting a business is still getting the customers. And once you're able to do that, that really separates you from the pack from what I'm seeing.
Yeah, that's like part of the entire thesis of why I'm doing like this podcast and the newsletter and everything is, I think like as AI allows people to build anything, supply is going to go way up. And the differentiator for a lot of builders is going to be like branded distribution. If you have
100%.
distribution, you can acquire customers, but if you have brand and distribution, then you can stand out from competitors who might also have the distribution,
Yeah, 100%. Agree.
So in terms of like acquire.com, can you just share, what the platform is? I've been following it since microacquire.com. So,
Nice.
so a little while, and I can't even imagine how much you paid for that domain, but that's freaking awesome.
Yeah.
But if you could just share about like what it is, the different categories that are on the platform, how the platform works, And we can dig from there.
Yeah, definitely. Quora.com, we're a online marketplace to buy and sell really any sort of online business. So think e-commerce, SaaS, newsletters, agencies, mobile apps, even crypto businesses or other digital businesses. I started the company after selling a startup of my own previously and going through the headaches with legal, finding the buyer, trying to figure out what due diligence is, and just thinking there should be a easier way to do this. Connecting with the buyer really fast, streamlining things like receiving a letter of intent or an asset purchase agreement or flowing into escrow so you can safely and securely close. Been running the business about 5 years. We've helped over 1,000 founders get acquired, and yeah, I always like to say we're just getting started.
Yeah, I was digging through some old tweets and I saw like your investor tweet where it showed a bunch of people that invested into, I think it was your seed round. I was like, wow, that's crazy. That's like every person that you see on Twitter or LinkedIn or a lot of people that I respect and look up to on your cap table, which is cool.
Yeah, I remember during the fundraise process, the idea was raise from a wide variety of different operators and entrepreneurs to help with deal flow. So anytime, you hear a startup that's looking to sell, they'd be referred over to acquire, and it worked out pretty well.
Smart. And so you've been running it for 5 years. How many businesses have gotten acquired, and what does like the numbers look like in terms of revenue or payouts?
We've helped over 500 million in total closed transactions. We've done over 1,000 acquisitions. We do about two every single day, so around 50
Oh,
to 80 per month, depending on the types of businesses that come in. And those range in size. So we do acquisitions as small as, 10, 25K. That's typically a pre-revenue SaaS business. And then on the higher end would be, low tens of millions of dollars. And that's where we typically will provide more of a hands-on approach. We'll do strategic buyer outreach. We'll, work with the founder every single step of the way. So really any sort of business we've helped to get acquired.
yeah. And I actually signed up
Mm.
for micro acquire back in the day,
Nice.
because I was trying to first build a very simple like Twitter product, like a Twitter analytics product, and I got frustrated because I couldn't do it. I'm not technical, so then I signed up and I was trying to find somebody who built something similar to buy. It ended up not working out because that's when like Elon took over and then started making it really expensive to build and use API.
Nice.
Um, but I was trying to figure out like what's your business model. So I know you have like a monthly membership that people can pay for. Is there also like a fee once people exit or for the buyer or seller?
Yeah, so we charge the buy side a yearly subscription to access the deal flow. So you can create an account
Sure.
on the marketplace, you can look at all the businesses, but you're only going to be able to see essentially vague information like profitable SaaS company in the MarTech space. Doesn't have any information on how to contact the owner or the actual business. And then on the sell side, we have a commission for closed acquisitions when we're successful. On the buy side, that business model is actually kind of funny. When I first started MicroAcquire, it didn't have any business model whatsoever. I
Yeah.
was kind of like you. I'm non-technical. I just thought it'd be really interesting to put all these cool businesses in the marketplace, and kind of figure out where do I go from there. And then people would list their businesses and have hundreds and hundreds of people reaching out for more
Yeah.
of the information. And they'd reach out, "Hey Andrew, like who do I focus on? There's all these different buyers. Who's serious? Who's not serious?" And I had this idea of, why don't we filter out um, buyers by just making them pay? Because the idea is if you don't have $400, you probably can't afford a multi-million dollar startup. And that turned into, one of the business models on Acquire.
Oh, that's cool. Are there any other like business models? I know you said, for the higher end sellers, you do more hands-on service. Is that a different tier that you have to pay for, like enterprise level or anything like that?
Nope. Nope. Everybody gets, essentially the same service, but when it's a larger business, we'll do other types of outreach to find different types of buyers. For example, if
Huh.
it's a SaaS company doing, $3, $4 million in revenue, it probably makes sense for us to do outreach to Notion or Google. Like some of the big companies that could be interested are really large private equity firms that, have specifically said they're looking to buy these types of businesses. We don't do that on the lower end just because we have so many businesses. We wouldn't be able to even get out that many emails of all the different companies. But
Yeah.
it's the same pricing for all the startups that we help sell, but it does tier down based on the size. So for 250,000 and below, it's 8%, 250K to a million. and this is the close value price. 250K to a million is 7%, and then 1 million and above is 6%.
Nice. I mean, as a seller, it's just icing on the cake, right? Like, if you have no problems dishing that out because wouldn't have had the opportunity to make that return otherwise. And it seems like a headache. I've never sold or bought a business, but it seems like a headache trying to figure all of that out, the entire process, and the due diligence, and getting people interested in buying the product.
Yeah, 100%. And traditionally, brokers will charge 10 to 15% of the whole purchase
Yeah.
price. So we come in lower than that. And then our network of buyers is 20, 50 times larger than any other broker or M&A advisor. We have over 500,000 registered buyers on the platform. So one of the main value, propositions that we have at Acquire is we instantly connect you with more buyers than possibly any other company would. And if we do that correctly, that ultimately allows you to get the best price. And that's really what every founder's, looking for.
Yeah, double-sided marketplaces are interesting because you have like a split focus of you need buyers, but you also need sellers. Which one drives the business for you? Is it sellers? Because without sellers, then you can't get buyers, or is it buyers because
It's always both. Like you need the good, deal flow to attract the buyers, and then obviously without the buyers, nothing ever sells. When I first started the marketplace, though, I exclusively focused on the sell side. And the idea was if I get good inventory, then I can market that to buyers on socials and stuff like that.
yeah.
But both are equally important. If I had to pick one, I would pick founders, just because that really is the product inside of a marketplace's supply.
Mm. What's your acquisition strategy for, I guess, for both? Like, how do you find people and get them to register their product that they're trying to sell? And then on the flip side, how do you find sellers? Is there any scalable like strategy that you use, or is it mostly word of mouth and kind of just like the network that you have?
Good question. It depends. We have multiple different ways that we attract both supply and demand into the marketplace. We have a
Okay.
lot of just inbound deal flow. Every single day we have, hundreds of buyers, hundreds of sellers that sign up. We have other pathways where we'll sit down and meet with a founder, understand their goals, what are they looking to achieve, what questions they have about Acquire. That converts them into a listing on acquire.com. But kind of the full gamut of marketing. I'm a marketing founder by trade. I'm not technical either.
Yeah.
I can use like Lovable and Replit and stuff like that. So I guess I'm a little technical now. But I focus 90% of my time on marketing on socials, going on podcasts. We have our own podcast, looking at our newsletters that we send out, running webinars, paid ad campaigns, our SEO campaign strategy, just the blog content that we write. Those are all things that I have my hand in every single
Yeah.
day. So to answer your question, it's kind of like everything. It's every
Everything.
channel.
Is there a bucket? Is there a bucket that does like outperforms all the rest?
Yeah, word of
Like, so I
mouth,
know you're really active on social too. So I'd imagine that
socials.
probably like you probably don't see it immediately, but it's like you're always top of mind. So eventually people will just like know acquire.com and go do it. And it's hard to attribute that to like your social presence or anything like that. But
Yeah, word of mouth, socials. The problem with those is just attribution. So you look in,
yeah,
marketing, it's always, direct conversion, stuff like that. So when you register on acquire.com, we have a small survey. How'd you hear about us? And that's always top of is socials and people hearing about the marketplace from other founders, referrals. I think that's kind of where things are going to is people are trusting less and less, paid ads, things that have low barriers to entry where anyone can just look at your ad campaigns and just copy them, or they can look at even your
yeah,
content, stuff like that. People really want to know what other people are saying about your product or service. And I think if you build some sort of viral component into your product, that's how you can really stand out from the competition. And that's always worked for us in terms of, seeing other founders share their acquisition stories or coming on our podcast and sharing how the acquisition went. I think that creates a nice flywheel effect in marketing.
yeah.
And
Yeah,
that's
I think just today before this podcast, you shared a screenshot saying like, this startup just got acquired. I think like 20 minutes ago.
yeah,
And so like that's just so smart because it's content that you'll never run out of. It gets the seller and the buyer excited, and then anybody who's just kind of been on the sidelines and somewhat interested in using the product gives them a little nudge to be like, oh wow, like, this is actually like deals happening on the platform. Maybe today's the day I sign up.
100%. And it's also proof of performance too. Like in our case, Acquire.com, founders just want to know that the platform works. They can meet buyers, they can sell their business.
Mm.
And so having that constant reminder of the success that's happening on the platform, I think is one of the best marketing strategies. And if, you're running another startup, you can do something very similar. You can take all of your reviews that you've had written, put them in a nice screenshot with your logo above it. Those are social posts. Start a podcast, have people share it. Any interesting thing that users are doing on your product, your platform every single day, find a way to share that each day or share the progress or people signing up, stuff like that. I think all that's just great marketing.
Yeah, you're a marketing founder, so you get it. But I talk to dozens and dozens of founders, and even something as simple as that, like advice of share what customers are saying about you and your product, like publicly. You either get their permission and use their name, or like blur out their name and just share like the good words that they're saying. Like that goes a really long way. Or even better, show like proof of performance, like you're doing, of like here's the a startup that was sold on our app or on our tool. Here's how much, and then it automatically shuts the haters up and gets people more excited about what you're building.
Yeah, and if you do that every day for a couple years, you'll be in a great spot. Like the key, in my opinion, in marketing is consistency. It's that constant reminder of letting people know, what do you do? How do you do it? Does it work? What are people saying? And the more you can bring other people's opinions into that, the more it starts to become fact and believable. It's kind of like the power of persuasion. When you're in sales, you need to follow up like 30 times or something ridiculous like
Yeah.
that. If you think of marketing the same way, but on a bigger scale where, everything you're doing has so much leverage. So every post that you're sharing is seen by potentially thousands of people. Just set a goal where you're just doing that every single day for a couple years, and you can have a commodity product where there's literally no differentiation. It's the same as every other product, but if you're able to show that customers are using it, they're seeing success in it. In my opinion, that's a pretty decent marketing strategy.
Yeah. When I was using the product, I saw like I think at the bottom of like every page of a listing, it says like why people, or like why the person is selling, or like reasons for opportunities for improvement. I don't know if you guys have this data of like why do most people sell their product or the app or their company that they're building? Do you have like you know any
Yeah.
general trends?
The biggest trend I see is founders have moved on and they're starting to build another company. It's to
Yeah.
such an extreme case where sometimes we have acquisitions that are closing, and then we'll have offers on another startup from the founder of the first startup looking to acquire another business, and they can't close until they receive
They've sold.
fund. Yeah,
Oh yeah.
that's by far the most common reason that we see. The second most common would be it's just time to cash in the chips. They built a valuable business. They've been running it for quite some time, 5 6 years, something like that. They're looking to sell the business, take a break, and essentially just enjoy what they built and reap the rewards. We don't really see too much like some people ask me like, "Hey Andrew, are people just selling because they're burnt out?" That one's pretty uncommon from what I've
Yeah.
seen. We do see that where maybe things just aren't working out. Founder realizes it's probably a good time to move on, start something new, or open up the next chapter, whatever that means. But the two most common by far is like, let me give you an example, like real scenario that we see all the time is a founder's looking to build like a multi-billion-dollar company. They start the company with huge ambitions, get the company to a few 100,000 in revenue or even a couple million in revenue. It's still not on that trajectory to be a, multi-billion-dollar unicorn or whatever they were originally trying to do, but it's still an amazing business. Great business, but it's not going to help them reach that goal. So they look to sell that business and typically will finance the next business or sometimes even buy a business, whatever their goals are. But that's a very common case where the business had bigger goals, they weren't able to reach it, and they're going to keep swinging.
Yeah, that's interesting. As like a marketer, when I use the product, I mean, I've used it a few times and like looked through a bunch of listings. The the intersection of the apps and the tools that I was looking at potentially buying was like is making some sort of MRR, or some making revenue. Um, and then in terms of like the notes at the bottom of the listing, it was the ones that I was looking for is like the founder doesn't really know marketing or distribution, or doesn't know how to acquire customers, or that was like the reason or opportunity for growth. And in my mind, as like a marketer, if the product is sound and there's people using and paying for it, then I would be able to figure out how to like scale it and get more users or more
Yeah.
customers. So I think there's an opportunity right now for people who are good at getting attention and turning that intention into like revenue. for either buying a business or building one from scratch using like an AI tool.
Yeah. Yeah, like, one big thing I see a lot is, there's builders and there's scalers. There's people that love building businesses, new products. They love kinda putting in the initial nuts and bolts. What is the brand gonna be, the company name, all that stuff. It's an extremely, valuable part of building a company. Then you have to scale the business. So you have the 0 to 1 and then the 1 to 2 or whatever you wanna call it. 2 different people. And a lot of these founders that build, the 0 to 1 companies, they build great products, but the go to market, the marketing, the sales, the pricing strategy, that stuff's just boring to them. They just don't wanna do
Yeah.
it. It's not something they're good at, they realize that, and that's when they sell the business. Um, that presents a huge opportunity for individuals that may not necessarily be, tried and true or born entrepreneurs. They just,
Hmm.
they know marketing, they know sales, they know good pricing strategy. They're happy to dive into churn analysis and stuff like that, to get the business from 100,000 revenue to a couple million revenue. I think, as, years go on from here, as AI continues to make, building these products easier and easier and easier, I think we're going to see an interesting time period where a lot of founders and builders are going to build really, really niche products that, get to a pretty decent revenue mark. Let's call it like 10,000 a year, 100,000 a year. And that's going to present a huge opportunity for a lot of people where maybe they lose their job or something like that. Maybe their VP marketing role doesn't exist at Facebook or whatever, and they can take those skill sets and acquire a business. And I think acquiring a business is a great opportunity for them because they may not necessarily, be the best at starting everything from scratch, where it's some things just aren't extremely apparent. But if there's just enough working, there's enough to understand where the customer's coming from, what are the customers pissed about, where are the really unhappy customers canceling, where do they come from? And that's an opportunity to fix all that stuff. I think it's going to be an interesting time.
Yeah. That's interesting. I think, like I said, for the marketing type, like there was an era where a lot of like marketers were doing like growth marketing and drop shipping and all that. I feel like that persona, that type of marketer that's kind of entrepreneurial, that can kind of figure out acquisition, is going to dominate in this era.
100%.
Um, because it seems like there's a lot of indie hackers that use acquire.com that just like build because they love building. And then they're like, in the notes, sometimes they'll be like, I'm just got bored and wanted to build another project. So I'm selling this for 10K, even though it makes 10K a month. So it's kind of like a no brainer for somebody just to pick it up, buy it, maintain it, and grow it. Um,
Yeah. I think there
yeah.
could be some good opportunities as well to do like even a roll up strategy where, Acquire, you can buy newsletters, with SaaS companies. So if you compare like audiences with software products, I've talked to a few people looking at doing that recently. I think that's really savvy as well, where you can almost acquire, the audience and the distribution, and attach it to a software product, and then package it up to, cash flow for the profits or resell it as a bundle. I think that's a really interesting strategy as well. Or you could just, like in your case, you can start a newsletter, you can start a distribution company, a brand, and then acquire a software product, onto that. I think all that is super interesting.
Yeah. That'll probably be the route that I end up going, if I can't figure out Lovable and Replit and all that. Do you feel like there's like right now in 2025 today, is there like a particular category of all the like subsets of businesses that you have on acquire.com that you personally like or think that's most underrated? I know the newsletter thing is new, right? You guys didn't
Yeah.
always have newsletters on the platform.
Yeah, just this year we opened up to essentially every other category. We've always listed these types of businesses, but we haven't really showcased them or,
Got it.
did a big marketing push on them. I think newsletters are really interesting because they're such a lightweight asset, and some are generating a good amount of revenue. They're extremely profitable. The margins are extremely high. Um,
And you can
the
run them lean too.
Run them extremely lean. I think AI complemented on them, is great because, you can write so easily with AI. Obviously, you want to, give it a personalized touch so it doesn't sound like a robot's writing it. But those businesses I think are great. Like I used to say, Shopify SaaS was one of the best first acquisitions because it's kind of like SaaS with training wheels where the distribution's built in, the payment flow and analytics and everything. I feel like newsletters are, probably the next best thing, from that because again, everything is built in. It's easy to transfer, easy to do diligence, easy to value, and then easy to grow as well. The businesses I seem to be drawn towards is just really commoditized products in big markets. I like
Mhm.
to, look at businesses where, and I'm not acquiring anything, but if I was, it would
That was
be,
actually one of my questions. Is like,
it's
if you
so
weren't
hard.
running acquire.com, like,
I'd be
how, like, what?
acquiring on Agora.com.
Yeah,
I would
you'd have a
100% be doing that.
portfolio of like 12 businesses, huh?
I 100% would. But I like businesses where you can come in 99th place and still do really, really well.
Mm.
Because like we were talking about at the beginning of this podcast, I too believe that the next chapter and the next area for entrepreneurs is the area to win is gonna be brand, distribution, and marketing because it's becoming so easy to just build the products and,
Yeah,
everything kinda looks the same, stuff like that. But again, if you can look at products that are built really, really well, at huge markets, maybe there's an opportunity to displace expensive providers of another service. Like maybe
yeah.
it's like a DocuSign competitor or something
I was
like that.
just thinking that exactly. Yeah, or like a
Yeah, like
Calendly or something you're paying like hundreds of dollars for, and drop it down to like $80 or something really
yeah, or
low,
like
and you still make money.
Typeform or something like that.
Exactly.
You have a very similar product and you're just marketing and selling to customers that already have the budget for that product. I think that's interesting. I think someone's going to do really, really well in that area. I don't know exactly what it looks like, but I love products like that. And I see them all the time. Like people,
Yeah,
I think it's so dissuaded by, startups that are in, big competitive markets like that, but they don't realize like 99 places make like a million a year. Like they're doing just
yeah.
fine. So I
Yeah,
don't
it's
know.
like the Peter Levels of the world, right? Like the indie hackers that run super lean, team of one, two, or three, and like the monthly expenses on the app that they built is like a couple $100. But if it's a couple $100 and the product is priced at $100 a year or whatever, then you only need a couple people for it to like make itself like be profitable, you know?
Yeah.
Um,
Another thought there that I think is really interesting, just if I'm getting too off topic, like just let me know.
no, this is great. Trust me, this is good.
Another thing I like to think about is, I think a lot of founders think maybe in absolutes in terms of what you can innovate on with AI. Like it's just the product, da, da, da. But another thing is you can innovate on just the cost structure of the business.
Mhm.
Meaning, let's use DocuSign again as an example. Like you probably don't need 1,000 employees. Like you probably don't need, XYZ and huge marketing spend and huge support team and huge engineering budget. If you're able to provide that exact same product and service or a similar version of it, but have a cost structure that allows you to price it at $5 a month or $10 a month, I think that
Exactly.
also opens up really interesting opportunities because your bar for winning isn't going public and making billions of dollars. It's, if you get to a million revenue, I think you'd be pretty happy with that business.
Yeah.
I think there's so many opportunities like that today with AI. So
And they scale nicely too. If you can figure out the acquisition channel. I feel like the unbundling of like huge products that people or like corporations are paying thousands of dollars a month or year for. I'm seeing those like do really well. Like for example, a HubSpot that allows you to do like email and social and scheduling and analytics and everything. I'm seeing like these indie hackers build okay, just a scheduling tool for LinkedIn that is optimized for LinkedIn analytics and LinkedIn growth and all that, and they're selling those at like $49 a month or something and doing
yeah,
incredible numbers as like a solo creator, solo indie maker.
yeah,
Um,
there's opportunities
and
like that at endless ones. I think if anybody's listening to this and like the one thing that I would also recommend is don't sell to indie makers or entrepreneurs if you can, or bootstrap founders. Find an ICP that has allocated budget already and target them. So if they're already using a LinkedIn tool or something like that, and they've
like marketers, yeah,
marketers are great, sales teams are great. B2B is usually the place to be in SaaS, in my opinion.
yep,
Just anyone with an existing budget. Otherwise, because again, on the sell side, I see, products all day long that are, great products, but typically just targeted at a customer that is super price conscious and, doesn't necessarily have budget for XYZ tool. And I think that's one easily avoidable mistake.
yeah. Can we quickly run through like the playbook of how to buy or sell a business? Like I said, I've never really done this before. Aside from using your product, I've never really considered, buying an app or a product, or a business. So can you just share like, if you want to buy a business, here's kind of like the steps you got to go through. If you want to sell a business, here's normally what you got to prepare for.
Yeah, let's do the sell side. So if you're
Cool.
interested in selling on Acquire, the first thing you're going to do is create a listing. So we're going to ask you just basic information like when you start the business, what is the trailing 12 months revenue, profitability, tech stack, any supporting documents. Once you submit that, my team will review it. We're essentially looking at the quality of the business. We're looking at areas for you to improve the business so it's presented really well to buyers. We'll also do things like we'll look at your P&L. If it's a super messy P&L, we have a recasting service where we go in and we'll take expenses like, the owner's salary, add it back to the P&L to show what's called SDE, so seller discretionary earnings. And the idea there is to show the profitability of the business that a new owner will receive. So one-time costs like a huge R&D expense, or maybe you did like an event, you can add that back into profitability because it's not going to show on the expenses next year. It's not essentially recurring or absolutely mandatory to operate the business. From there, you're going to start meeting with buyers. You're going to schedule calls, meetings. You're going to run a process for typically 30 days where you're going to meet with everyone that's interested. You're going to start fielding offers, and this is going to come in the form of a letter of intent. And then after whatever time period you pick, based on the amount of interest you receive, you're going to pick a letter of intent. And then from there, you're going to formally sign the letter of intent, move into due diligence. And that's where you're going to work with a buyer to essentially go through everything about your business to prove that it's accurate in the way that you stated it was. So, going through your finances, going through your operations, understanding how many support tickets you have, going through the software of the business, going through inventory if it's an e-commerce company, understanding how is the owner going to take over this business on day one of closing. During this time, due diligence, typically an asset purchase agreement is drafted. That's a big formal document. That's the one to pay a lot of attention to. It's going to have all the terms from the letter of intent. That's when you're going to be working with your legal team to make sure that you're comfortable with all the terms of the document. Then you're going to go ahead and sign that. You're going to move into escrow. The buyer sends funds into escrow. You transfer the assets over to the buyer. And then you do everything right. You got acquired. But it's a lot more difficult than that. It's a very
Yeah.
simplified version. If you're looking to buy a business, typically you want to, map out what you're looking to acquire. You want to, have the budget, business type, start meeting with sellers. You're going to be looking for things like how much time is the owner spending in the business. If the business is super reliant on them, that may not be the best acquisition. The best acquisitions are ones where the business can run without, the founder. You can transfer everything over. Things are clearly documented. Finances actually make sense. It's not this hard to understand picture. From there, it's in reverse. You send a letter of intent outlining your, the price, the, time for exclusivity, any sort of earnout payments, stuff like that, asset purchase agreement, and then close. Super simple, but I hope that is a good starting point.
Dude, I can't even imagine having to do all of this without a platform that like removes all the mess or like the headache. So, I mean, it's cool that you built this because you've kind of solved. You've also sold two businesses, right?
Yeah.
Yeah. So you're kind of scratching your own itch, and you understand the pain that people have gone through or do go through on a day-to-day basis when they're trying to sell or buy a business.
I mean, it's really hard and it's confusing. It's so confusing. There's always acronyms: LOI, APA, escrow, attorneys. But it's usually the biggest liquidity event in a founder's life. So making sure that you do it correctly, you're following all the steps, I think is extremely important. Yeah, like when I sold my first business, I didn't know what any of this stuff was. I didn't know what due diligence was. I didn't know, if I was getting a fair price. If when do I loop in my attorney? Like who does what? Am I doing it all correctly? So having a company that helps entrepreneurs in that way it's super rewarding.
Yeah. What are the most common reasons why like a deal doesn't go through? Like if people start the conversation, they're in escrow and then they kind of fall out,
Typically, if maybe a seller like oversells certain
like
aspects.
fluffed up.
Yeah, I
Yeah.
think it's important to just share everything extremely openly as if it's going to be discovered by the buyer because it is. And also understanding every business has bumps and bruises and, churn went up this month or, we built this
Mm.
feature and it doesn't work out or, stuff like that. Like, we just lost a huge client during due diligence. Like all that stuff, it's normal. It happens. A lot of buyers understand like they're not buying like a perfect, publicly traded, pristine, engine here. Like it's ran by a couple founders. Like, customers love the product, but there's all these things to fix. But just like outlining what needs to be fixed, what's gone wrong in the past, up front, so there's no surprises.
Yeah.
I think is key. And I think other small things that I see is when founders just aren't really sure that they want to sell is another big one, where they aren't quick to respond to buyers. Maybe they you know
They
don't
get
fall.
cold feet or
Yeah, sometimes, or they just don't take the process seriously, and that can give
mm,
buyers the wrong impression. And any sort of bad impression you make with a buyer can really come back to bite you later. So I
yeah.
think if you do go to sell and you want to avoid mistakes, I think being as prepared as possible, having extremely clean books, having a clean P&L, operating the processes of your business, essentially doing everything you can to create a transferable manual of how a new buyer can, hit the ground running on day one. All of that substantially increases your odds of closing. And then also getting multiple offers from buyers. When you get multiple offers, you can get, the highest price, maximize your exit. But just not having, professionalism to the process, I think, is the main reason.
Yeah, that makes sense. I know this ranges a ton, but are are there like, different multiples for different types of businesses? I know like a SaaS business is way different than like a content business, or even like an agency business, but maybe can you share what the multiples look like and, like what numbers it play off? Is it revenue like for the year, profit,
Yeah.
um, or all of that?
Yeah. Revenue or profit multiples, it tends to be dependent on the growth rate of the business. So, for example, if it's two different SaaS businesses, but one is break even, it's growing really fast, that's going to be valued on revenue. If it's slow growth, but it's profitable, it's going to be valued on a profit multiple. I think that's a huge distinction. I think a lot of SaaS founders think, oh, if I have, XYZ revenue, just multiply it by 10 or something like that, and that's what I'm worth. But it couldn't be further from the truth. Like to command a
Yeah.
very, very high multiple, when I say high multiple, I mean 6, 7, 8 times revenue, something like that. You need to be growing like triple digits year over year. And if you're not sure and you want any sort of comparison of what the market is paying, you can look at public comps. You can look at larger acquisitions as well that have publicly available data. But rule of thumb, I like to say for, let's say, a moderately growing SaaS business, let's say it's like 10% per year, it's profitable. 4 to 7 times net profit, I think, is a good multiple. For agencies, it's going to be closer to 3 to 5, and then e-commerce is
Mm.
typically 2 to 4. So it starts to trail down, and that's really dependent on the business model. So how healthy is the revenue? If the revenue is recurring, you're going to be able to command a higher multiple. And then if it's a little more lumpy and service based, like agencies or e-commerce from selling different products, it's going to command a lower multiple.
If there are like two businesses that are almost identically the same, how can and they're making almost the same amount of money in the same niche or category, like how can one stand out to make more in an exit or be valued at more? Is there anything that business can do to prepare?
Competition, just creating competition in the process is the number one thing you want to do to increase and maximize your final sale price. It's just like any sort of
Mm.
asset. When you're the only buyer submitting an offer, you're not going to submit at a 6, 7 times multiple. You need to know that if you don't buy this business, that someone else is standing behind you and is ready to submit an offer. So you need to submit above asking price. So if you
Huh.
want to maximize your acquisition, finding a way to essentially control the timeline of the process. One way to do this is something called a deal schedule. So let's say you go live on acquire.com. You want to make sure that you field all buyers at the same time. So you tell buyers that you're going to be selecting the winning bid in 4 weeks. So that gives them an idea of when the timeline is. And the benefit to you is you have all the offers come in around the same time rather
Yeah.
than one in week one and then one in week three. Because you might accept the one in week three and then the best one comes in week five. So you have them all come in at week four. And that allows you to go back to different buyers and say, hey, buyer XYZ submitted this. Are you able to increase the price or remove this term? And I'll be able to move forward with you. But that, in my opinion, that's the number one thing you can do is um, add more competition, more buyers um, to get as many offers as possible.
Is there anything that they could do with the business itself? So like, let's say we both have a SaaS product in the same exact category. You're making $1 million a year. I'm making $1 million a year. You have like, an email list of 100,000 people and a huge social following for the brand account. I did not focus on any of that, and I just make money through paid ads or whatever. Is your business worth more potentially, or do buyers not really care too much about that?
I think it all depends. Like, what is the buyer going to be able to do with that secondary asset? Like, two easy wins that a seller can do is be flexible on things like the transition period. Anything you can do to de-risk the acquisition. So you can go to a buyer and say,
Gotcha.
hey, maybe, you have XYZ price in your head. Maybe it's, I need to reach $2 or $3 million on an exit price. Uh, from a buyer perspective, it may not be worth that amount. But if you
Mm,
can get to, a flexible or creative deal structure where maybe some of the payment is deferred through an earnout, maybe you stay on the business for 12 months or something like that. Anything so the buyer doesn't buy the business, they overpaid, everything falls apart. Because that's really what a buyer is weighing in terms of risk, and they're paying
it's risk.
to
Yeah.
mitigate that risk. So if you can, be flexible on how you're going to receive the payment, maybe it's seller financing, maybe it's, a different creative blend, maybe it's both. That's a huge one. Another one that you can do, and I've looked at thousands of P&Ls for different businesses. There's always things on a P&L where you can reduce the expenses to make the business more profitable, make it
Yeah.
operate leaner. This is going to depend on how fast you're growing. If it's starting to become a stagnant business where it's growing modestly, but you're still spending as if you're in high growth mode, I think that's a great lever that a lot of founders can pull pretty quickly.
Yeah, that makes sense. Are there any other mistakes that you see from sellers on a regular basis, or things that people can avoid
Lack of
before that they yeah, before they kind of go through this entire process? 'Cause I
Yeah.
know once you're kind of in it, it's a little bit more difficult. All your numbers are up there, and people are looking at your stuff, so you can't really like shy away from it. But is there any other mistakes you see from sellers?
Yeah, lack of preparation, I think, is a big one where, if you just spend, let's say, 30 days preparing before you go live on acquire.com and you document how does support work, how many questions you get, who answers them, at what times are they available. Same thing for marketing. Here's how, we acquire customers. Here's channels that we tried in the past, but they didn't work. Here's our
Yeah.
sales process written out. Here's the product architecture so you can quickly and easily understand it. Everything that you can do to help buyers wrap their head around the business quickly, I think is a huge, huge quick win and can make everything just that much smoother.
Nice. So this is like the main thing that you do, right? Runacquire.com. Like you
It's,
don't you don't have like any other like side hustles or anything like
no,
that?
it's it's the only thing I do, man. This is it.
That's awesome. Is okay, so you don't have to answer this question if you don't want to, but if you weren't doing this, what startup would you acquire or build or like tinker with? Is there anything that comes top of mind? Or you want to just save it so you can actually like do it later?
I can answer it. Gosh, I don't know. I think again, commodity products. I think there's something there. Whether it's like a Typeform competitor or a DocuSign competitor, I really like product led growth businesses with straightforward products. I think a lot of companies, especially those examples, they're built to appease, raising hundreds of millions of dollars, or enterprise grade customers. And I think, a simplistic product there could do really well. It just depends on your goals. If I was to do another startup, I think my goals would be, I really do think just getting a couple million revenue, I think that is awesome, especially if you own the whole thing and it's bootstrapped.
Yeah.
I think that can be entirely life changing. And when that's your goal, I think the options of what you can build get really interesting. If you're trying to do $1 billion things, that's the dumbest idea in the world.
It's a different game.
Yeah,
Yeah.
it's a totally different game, and that's okay, and that's awesome. But for me, I think those businesses are cool. So I would probably honestly start one of those.
Yeah. Are there any like recent acquisitions that have happened on acquire.com that you think were unique or interesting in how it played out, or the seller did something different to stand out, or anything I don't even know if you have data on that type of stuff.
Yeah, I mean, one that comes to mind because it just closed. It was this acquisition that took over a year to close.
Wow.
It was this data company that sold to another data company in Japan. So there's a language barrier, there's a bank involved, financing almost didn't get approved like 3 times. We had to fly to Japan, we flew to New York to meet with them. Um, and it was just a roller coaster. We had the meetings where like both founders were banging on the table, like, "You don't respect me." Like,
Oh shit.
yeah. And that happens in M&A, especially as the deal gets
Oh,
dragged out. Everyone starts to get kind of deal fatigue and
frustrated.
tired,
Yeah.
frustrated. It was no one's fault for the delays, but everyone just wanted the deal to close. That one was a lot of fun to work on. We had an acquisition close this month. The founder was 84. He
Well,
sold
that's
for
cool.
Yeah, he sold for like 2 million cash. Um,
How long did you run the business for? Like, I mean,
about
at 80.
8 years. Um,
Wow, that's
Yeah,
cool.
I know. That one was, just, kinda give me maybe warm in the heart. And he's gonna retire.
Yeah, it's like
He's done retire. Like, he's done. So he gets to sail off into the sunset with, 2 million cash. I thought that was a really fun one to work on. I mean, we just see stuff like that all the time. We see people that, are ready to move on. They wanna start a new business. It closes. They're super happy. But those 2 come to mind.
yeah. I mean, and that kind of gives us hope, right? Hopefully,
Mhm.
when we're in our 80s or 70s, we're still kicking and
I know.
buying or selling
Well,
businesses.
hi
That's
so this
awesome.
this was actually a portfolio of 7 different products too. So he was
Wow.
yeah. I'd love to see him, when he was in his 30s, what he was up to.
Yeah,
Probably crushing it.
running laps around us.
I know, no kidding.
So, for acquire.com, how big is your entire team and kind of like what are the operations like?
Yeah, we're lean. We're about 15, 16. We have
Oh, that's cool.
the largest team is support, so we provide email, live chat, phone support, all that fun stuff. Engineering team is 4, marketing team is 2, advisory team is 3. Yeah, lean and mean. That's how I like to run it. I think companies that are small and everyone's aligned and focused. I've always enjoyed those environments. Um,
Since the team is pretty lean, do you kind of have your hand in all the buckets, or like what does your day to day look like on a normal work day?
yeah, marketing would be my biggest bucket, but I'm in, our support help desk all the time. I think that's where you can, learn just so much from customers. That's pretty much where we get our whole product roadmap is, oh, I'm getting stuck here. I don't really know how this works. Like, oh, this thing's so frustrating. So that drives a lot of the product roadmap. But week to week, I have product meeting, marketing team meeting, broader team stand ups. We're the size where, we can all just pile into a Zoom. What's your main goal for the week? How's the weekend? That sort of stuff. Um, yeah, I mean, I got my hand in everything: marketing, support, sales, advisory, a little bit of everything. Marketing's my main focus stuff.
That's like I think that's like probably like the perfect size team. So I worked at a startup and I think we were like maybe 9 people, 10 people. It was a seed stage startup. I was the head of growth and marketing, and like around 10 people is where you know everybody and you can kind of like help out in any part of the business, whether it's like acquisition or talking to customers or being there for the engineers, even though
Yeah,
I'm not an engineer, or giving them like product feedback. But I think as the company starts to scale past like 20 or 30 or 40, you become so like niche or far removed from other parts of the business that me personally, I think it's less fun.
no,
And I've worked at
same,
bigger companies too. So
same.
it's cool that you've kept it pretty lean.
And you just move so much faster. Like, you avoid the
Yeah.
meetings of like, "Hey, I have this idea. All right, let's have a meeting about it. Oh,
Meetings for meetings sake.
yeah, Jim's not available. Let's get him involved." And then like a month go by and you're like, "Did we get anything done? Oh my gosh." And that's just a
Yeah.
function of success. The company just gets bigger. I don't like working in those environments. I like, when the team is small enough to where everyone has their core responsibilities. Things get done that day rather than next week. So we do it by design. That's specifically what I like the company to be like.
Yeah. Do you have any like interesting? I'd imagine you probably don't have that much time because you're running this business. But any interesting hobbies or things that you do with your time and energy
I like to
outside
golf.
of work?
I like to golf. I golf quite a
Nice.
bit. I try to go at least once a week. Aside from that, I always say, some people like to play tennis on the weekend. I like to play business. I love
Yeah.
startups. I love everything about them. I love what I do.
Yeah, you can tell just based on like I've checked out your Instagram. Obviously, been following you on Twitter for a while. Your LinkedIn, and that's the reason why I wanted to have you on the show. Is like I think you're unique in the sense that you have all this data, you have all this information. You're seeing more startups than almost anybody in the business. And given the fact that you have a double-sided marketplace, you can see on both sides, the buyer side and the seller side, and like all the pitfalls and the mistakes and all that. Um, on both. So any other pieces of advice for maybe the seller, because there's probably more people that are listening to this that are going to build an app or build a product or build a business and hopefully exit one day if they choose to go down that route. So any other words of advice?
I'm a big believer that, build something that you're truly passionate about. I think if you're having fun doing it, you're gonna go farther, you're gonna spend more time working. I'm also a believer that hard work does pay off. So like the hours you put in actually do translate into, better outcomes. So pick something like you can really sink your teeth in for at least a couple years. If you can't do
Hmm.
it for a couple years, I probably personally wouldn't even bother. You could still make a great business in short time. There's this kid who sold the vibe coding platform for like 80 million in 6 months recently. To Wix, if you know what I'm talking.
Insane. Yeah, I
Yeah,
saw
but
that.
but those are outliers. Those are
Insane.
outliers for mere mortals like myself and probably everybody else. Put your head down on something you can really focus on for 2 years, and you'll do great.
I guess one more question. Do you feel like the fact that like vibe coding is becoming a trend, it's gonna like water down products and make people lose trust in trying new products? Because like before, if something was built and being used by other people, it kind of give you the signal of like, oh, this is a good product. I don't mind paying for it or using it or switching from a service to another service. But now, since anybody can build a product and there's so many competitors within a niche, you think people will like lose trust in trying new things and just want to stick to whatever's working for them on the consumer
Maybe,
front?
maybe. I don't. I see a lot about a lot of vibe coding products. A lot of people building really, really interesting stuff. But I haven't really seen a lot of like real businesses built just yet. I'm sure
Mm.
that will change. But like I think right now we're getting to the point where these tools take you to 80 to 90%, but we're not
Yeah, the
100%
final
there yet.
10% is hard.
Yeah, and I think the challenge has always been building real business, going to get customers. But to answer your question, personally, I do. If I feel like it's been vibe coded, I'm not putting in like a real password in there. I don't know if the product's gonna be
Yeah, or
there in
credit
6
card
months.
or
Yeah,
exactly.
no. Again, I'm sure all this will change, but a lot of this is just so new, where so many products are so brand new. If it's been built in a weekend, like I don't see why I would personally pay for it. And I think all this is going to change, but this is also kind of what I'm seeing on, the acquire side, where we see a lot of products with no revenue, not a lot of buyers, just the quality there just isn't really an attractive acquisition target. But then when you take a few steps forward and you see the businesses with, paying customers, traction, um, those businesses seem to be accelerating.
Yeah.
So I guess what I'm trying to say is, it's hard to know like what's going to be here in 6 months.
I guess it kind of goes back to where we started with like branding distribution, where like even if somebody vibe coded an app or tool or SaaS product, like partnering with somebody who has like tenured brand and distribution and kind of borrowing that brand equity from them, because then if they put their name, like the person that comes to mind is like Sahil Bloom or Ali Abdal, how they're partnering with these different builders and like essentially letting them borrow their brand equity that they built over decades or a decade or 5 years or whatever, and then their user base or follower base being much more confident that the app itself is going to work because they've trusted this person and followed them for years. I
Yeah.
think in those situations it makes, I mean, that just seems like a winning situation versus somebody else that's just building an app in a weekend and trying to like beg people to use it and pay for it and put their information in.
Yeah, I think another way to look at it too could be, every startup day is a distribution company. Focus on distribution for a long period of time. And I think that kind of fixes a lot of the problems that we were just talking about, where there's just not a lot of brand trust. Users don't know if it's going to be there. Is it even safe to use from a security perspective? I think if you, really put time into building brand distribution and trust with customers, it's not so much how the product is really built anymore.
Yeah. One more question actually now. So since you're a marketing guy and you kind of get this, are there any underrated distribution channels right now that you see? Because there's like email, there's partnerships, there's social, there's paid, there's there's like tons of different routes. But are any that you think more people should focus on?
Podcasts, 100% podcasts. I think
Interesting.
if you don't know how to create content, just make a podcast, invite all the people from your industry, invite customers, hear their case studies, how they're using the product, clip that up, put it on socials, make YouTube shorts, TikTok videos. Like you just have a whole marketing strategy right there from a podcast. And I think with, more and more content being created with I think it makes things like a podcast more valuable because there's just so much
Mm.
authenticity in it. And
Yeah.
it's so easy. I think a lot of people, I think there's a stat like 95% of podcasts never make it past like 10 episodes or something.
Episode 10. Yeah,
Yeah.
exactly.
So I think maybe a theme of everything that I've been, chatting with you about it is, I think consistency is almost the name of the game now. Like, just it always has been. Where just get past the 10 episodes, focus on distribution for more than a year. Like, just stick with one thing, and you'll just the only competition you have is that 5%.
Yeah. Dope, dude. Well, thank you so much for the time. I really appreciate it. And yeah, we'll link out to acquire.com, but anything else you want to link out to or promote?
Just acquire.com. It's everything.
Say, cheers, brother. Thank you.
Thanks, man.